So let's record the import of digital camera. So the second step of this transaction is importing. Now because you are importing goods, so import and exports of goods and services are recorded in current account. So in current account we shall record import of digital camera, and this is Chinese yuan 1500. Now you are importing, therefore imports would be recorded with negative sign and would be recorded as debit. So in the debit column we shall record negative 20,000. And what you are exporting, actually you are exporting the Chinese yuan. You are giving Chinese yuan and you are receiving digital camera. So you will give 1500 Chinese yuan in your bank account. So definitely bank accounts are recorded in the capital account of balance of payment. So in capital account we shall record exporting bank account, and this is Chinese yuan 1500, which is equal to 20,000 Pakistan rupee. Now you are exporting, so exports would be recorded as credit, so 20,000. Now after recording this transaction, just take a look at balance of different accounts in balance of payment. In current account you will find a deficit of 20,000 rupees because there is an outflow of funds equal to 20,000. So the current account shows a deficit of 20,000, while the capital account has a surplus of 20,000. Now individually the current account has a deficit of 20,000 and capital account has a surplus of 20,000, and there is no transaction in foreign reserve account. The individual accounts have deficit and surplus, but balance of payment as a whole is balanced. There is no surplus or deficit in balance of payment as a whole, because total of debit entries, which is 40,000, and total of credit entries, which is also 40,000, makes the balance of payment balance. So balance of payment account is in equilibrium. But because there is a deficit in current account, so normally the deficit of current account is known as deficit of balance of payment, and we shall discuss it after taking few more examples of transactions, and we shall try to understand that why the deficit of current account is known as deficit of balance of payment, and we shall also see different definitions of surplus or deficit of balance of payment. So let's just take few more examples of transactions, and then we shall discuss the surplus or deficit issue of balance of payment. Let's take an example that the person in China now wants to make an investment in Pakistan. You have exported 1500 Chinese yuan to China, and you have imported the digital camera. And let's simplify the problem. He is the only person in China and you are the only person in Pakistan. This is a huge simplification of the actual situation. Just to understand, he is the person, the seller of digital camera is the only person in China. Now he has 1500 Chinese yuan and he wants to make investment in Pakistan, and he wants to buy some securities in Pakistan, maybe some government securities in Pakistan. Okay, let's just write the second transaction. The second transaction, so just write this transaction over here. The second transaction is that the seller of digital camera wants to buy some equity securities in Pakistan. This means that he wants to make a portfolio investment in Pakistan. And what you are doing, you are exporting equity securities to China. So just write the second transaction here as exporting equity securities, or you can say that receiving portfolio investments. Worth say 1000 Chinese yuan or equals to Pakistani rupee, you can say that it is 13,333 Pakistani rupee, which is equal to Chinese won 1000. So now how to record this transaction? You are exporting equity securities or you are receiving portfolio investment, and portfolio investments are recorded in capital account. So second transaction would be recorded here as exporting securities, and this would be as portfolio investment. And now you are exporting securities, therefore exports are recorded as recorded with positive sign and are recorded as credit. Therefore exporting equity securities or receiving this portfolio investment would be recorded here as credit, and 13,333. And the second aspect of this transaction is what you are importing on the other side. You are importing Pakistani rupee of 13,000. So you are receiving 13,333 in your bank account. So second aspect again would be in the capital account, and this would be importing bank account, and which is equal to Pakistani rupee 13,333, and imports would be recorded with a negative sign and would be recorded as debit. So 13,333 here. Now again observe the balance in balance of payment account. In current account again we have a deficit of 20,000. In capital account we have a surplus of 20,000. There is no transaction in foreign reserve account, and the total of debit entries is 53,333, and total of credit entries is also 53,333. Balance of payment as a whole is balanced, but there is a deficit in current account, so we can say that balance of payment is in deficit. But actually what we are referring towards is the deficit in current account, because balance of payment is always balanced, but there might be a surplus or deficit in current account of balance of payment. Now let's take an example of exports. For example, in third transactions, for example, you export fruit juices to America, to United States, equal to say $100. So the export of goods would be recorded in current account, and we shall record in current account as exporting fruit juices, and the amount is US dollars 100. The exchange rate of US dollar and Pakistani rupee, for example, let's assume 88 rupee per dollar. This is, let me write here, at the rate 88 Pakistani rupee per US dollar. So because now you are exporting here, and exports are recorded as credit, so in the credit column we shall record the Pakistani rupee equivalent of $100, which is 8800. So 8800 would be recorded in exports. And what you are importing, what you are receiving in return, so definitely the buyer of these fruit juices in United States will pay you Pakistani rupee. So you will receive 8800 Pakistani rupee in your bank account. So bank accounts would be recorded in capital account. So third item would be recorded here as importing its bank account, and the amount is Pakistani rupee 8800, and this import would be recorded as debit and would be recorded with the negative sign, so negative 8800. Now again observe the balances. Current account still has a deficit of 11,200. Capital account has a surplus of 11,200, but the balance of payment as a whole is balance, because the total of debit entries, which is 62,133, is equal to the total of credit entries, which is also 62,133, and there is no transaction in foreign reserve account. So therefore the current account, because the current account is in deficit, we can say that balance of payment has a deficit of 11,200. But what actually we are referring towards? We are referring towards the deficit of current account, which is 11,200. Now, why we call the deficit of current account as the deficit of balance of payment, and what type of transactions are recorded in foreign reserves account?